You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again, back from our hiatus last week for the July 4th holiday. A rare Thursday off here on the network. Don't have those too often, but it is time once again for TWIFO, This Week in Futures Options. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks have been having a good time of late. Remember, if you like what you hear, if you are having a good time, leave a rating, a star, a comment. All that fun does help new people discover the content out there. There's a lot to discover. We did break Spotify a few weeks ago. Too much content they couldn't handle. They were choking on it. So we had to dial back the fire hose for Spotify out there. Luckily, you can still get all of our stuff on our website or indeed on our mobile app if the roughly 3,000 episodes you can now access on Spotify is not enough for you. Of course, if that's not enough for you, you want to go above and beyond, only one place to go, theoptionsinsider.com/pro. You get awesome pro Q&As, you get options oddities at the end of the week, you get early access to a lot of content. In fact, a lot of stuff that hit last week while we were off for the holiday from the OIC and the conferences. You heard all that already on the pro side out there weeks ago. So check it out, theoptionsinsider.com/pro, the place to go to learn more as we learn who's joining us on the old CME Group Hot Seat this week. I'm pleased to welcome back on. It feels like it's been forever since I've talked to her, Miss Carley Garner, the senior analyst over there at DeCarley Trading. Carley, welcome back to TWIFO. Feels like it's been forever, doesn't it?
Mark, yeah, I think it's because so much has happened in the markets since the last time we spoke. So there's no shortage of topics to speak about.
A lot popping off. It's been since May 9th, so a little over 2 months. Feels like an eternity. What's hot? What's new? What's the cool thing going on over there at DeCarley since last we spoke?
Well, summer markets are rough. So we spend most of the summer trying to put fires out, and it's just the nature of the markets, things thin out and volatility picks up. And so you have to be careful not to be on the wrong side of some of this stuff, because sometimes markets don't make sense. And during the summer months, that statement is more true than most other times of the year.
dare I say it, you could apply to what we're seeing today as well as we get right on into a little bit of the movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers, the portion of the show where we break down everything lighting it out to the light side and to the dark side over there at CME Group this week from an underlying and indeed from a vol perspective. We'll get to vol in a little bit. First, we'll start things off as we are wont to do on the underlying side. It seems like a roughly 50-50 week green versus red, even though I will say the largest percentage mover is certainly on the red side this week, but a lot to unpack. Carley, I know it's been a while since you've been on the show, but hopefully you remember how this works. You think you can handle leading us through the light side and the dark side this week?
Maybe we can give it a shot.
All right, go for it.
You may have to rescue me.
You get to pick where we start then. It's fun.
All right. I've got my eye on the dark side. Lean hogs.
You're going right to number one. I love it. Right to the top of the list. All right, go in reverse order. Why not? I have at it. Start at number one and then work your way down to 5, I guess.
All right. So lean hogs down 21.7% this week. And I am embarrassed to say we started getting long a little early in this market. So we're on the wrong side, long and wrong in lean hogs. Soybeans down 5.78% this week. Soy meal down 5.41%. Soybean oil down 5.36%. So it's not a good week to be a farmer or a rancher in the United States. Palladium is at number 5, down 4.05%.
See, I knew you can do it. See, you think you can handle the light side, maybe going in reverse order from the bottom this time?
All right, let's do that. Light side coming in at number 5, Bitcoin up 2.36%. Utility sector up 3.1% at number 4. E-mini S&P Midcap 400. We don't have a whole lot of people trading that, but it's up 3.29% on the week. Real estate sector also don't have a lot of people trading that, but it's up 3.59%. And E-mini Russell 2000 up 4.85%. I will say that most of the light side this week are actually markets that most people don't trade. So I find that interesting.
Interesting indeed out there, listeners. Let's get to a little bit of vol now, see if things are interesting as well. And it's an interesting couple of weeks since we've been off, listeners. We're just going to run this report from the end of our hypothetical show this time last week, listeners. So looking back a week on the vol front, once again, we are mostly pinning the needle to the downside. Just about every product we're going to talk about on the CVOL front this week is all at its lowest levels for the week, with the exception of the first two here at the top of our list, kicking things off on the vols front in the metals. The metals vol right now, 17, pretty much even, up about 0.2 of a point. So popping a little bit today. On the week, it's have a range of 1682 to the dark side, 1775 to the upside there. So hanging out at the lower end, but not quite pinning the needle for its range on the week. And then ag products, we're just talking about ags having a bit of a rough week. Ags 21.29 right now on the CVOL front. That's up 0.11. The only other product that's up today. And indeed on the week, the only product in all of the CVOL that is pinning the needle to the upside, again, at the 21.35, that is the high for the week, pretty much right at it right now. And the low came at 20.79 earlier this week. Everything else we're going to talk about is pretty much in the red this week. Let's go to FX first, 5.78 on the CVOL front. Pretty much unched today, off about 0.03. On the week, pretty much hanging out at its low for the week. The high was 5.92. Earlier this week. Below that, we have the commodities aggregate CVOL, 29.26 is where that's hanging out, off again 0.08 today. On the week, hanging out at its low for the week, the high was 30.93 earlier this week. Then we have the Treasury price vol coming in first at a 5.88, off 0.13 today. Hanging out at its low for the week, the high was 6.19. Again, not a lot of price vol in the Treasury complex, listeners. Below that, we have the energy complex, 40.83. Energy, is a little bit more volatile of a product, off 0.27 today. And the high for the week came earlier this week at 43.60. So obviously vol coming off pretty aggressively out there in the energy CVOL this week. And at the bottom of our list, the most volatile thing we have here, which is, of course, Treasury's from a yield vol perspective, that's, of course, a lot of vol. 103.4 right now, off 2.1 just today, hanging out at its low for the week as well. The high was 107.70 set earlier this week. So it is summer, listeners. You expect vol to be coming off, and that's pretty much what we're seeing out here across the board in the CVOL complex. Carley broke down our movers and shakers this week. There's a lot going on in the ags, but before we get there, we've got, I think the technical term is a bonkers move going on out there in the equities. So I think we'll start there first.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, let's play ball. Head on over to cmegroup.com/TWIFO, TWIFO. Once you're there, go into that asset class drop down. You're going to go down 4 slots to equity indexes. Then in product family, you're going to go to US Index E-mini. And then, as you can see from what's topping our list, I think we're going to hang out in small caps first. It's a crazy day out there. We had, of course, a CPI number earlier this morning, coming in a little bit lighter than expected. Actually, our first month-over-month decline in CPI since the height of the pandemic. So you'd expect it to be, hey, you know, all sales ahead, all upside in the equity space today. And instead, we're seeing a lot of equity indexes taking on the chin. S&P off nearly 1% as we're kicking off the show. NASDAQ off nearly 2%, with the exceptions of our friends small caps just getting the bit in their teeth, up about 3.5% just today as we were coming into the start of the show. If we go back just to earlier this week, it's up nearly 5%, 4.87%. So apparently, Carley, the dispersion trade is on. Everyone's selling S&P and NASDAQ and buying small caps. I don't think you and I have really talked small caps that much. Are you or any of your clients really big in small caps? And what are you thinking about this crazy move we're seeing out there this week?
Well, we really don't have too many Russell futures traders. But we are employing pretty aggressive hedges in the stock market for our clients. I mean, I know it's real fun to watch the S&P and the NASDAQ go up every day without any type of regard to risk. But the reality is I've seen this before, and maybe the S&P squeezes another, who knows, 200, 400 points, maybe even 500 points. But the reality is the higher it goes, the more dangerous it gets. So I don't think this is a time to step on the gas. I think it's a time to tap on the brakes. And what that means for most people is to put on some risk reversals, sell calls, buy puts, so that if all heck does break loose on the downside, and one day it will, we'll just wake up and the world will change and things will be going the other way. You want to make sure you have some sort of risk measure in place when that does happen, because things don't go up forever. They never have, they never will.
We were just talking about this as well on our options bootcamp show yesterday, about how fairly cheap it is to buy protection in a lot of these major indices. We were looking at the S&P, but you could probably take this analysis and apply it to a lot of them, probably small caps. I haven't looked. I'll crunch the numbers today. Maybe we'll see. Maybe it's a little bit higher now. The Qs certainly was that way as well. Every headline is kind of what you're saying, Carley, about, we're at pretty much historic highs. We certainly were yesterday, the best time in the history of the markets to sell them. Everyone's talking about, is there a sell-off coming? So you'd be forgiven for expecting a little bit of juice in these puts. Yet we priced out the puts going out to September in SPY yesterday, and you can get not quite 1-to-1, because you're never really going to see that in equity skew, but pretty close. You can buy roughly a 30 handle out of the money in SPY, so obviously 300 in SPX puts, and have to sell about 25 handle out of the money calls to finance it. So pretty close to 1-to-1, about as close as I've seen in some time. So are you noticing that as well when you're talking to your clients and putting on hedges for them, that perhaps it's not quite as expensive as you might have expected?
Absolutely. They're actually, like you mentioned, quite cheap. And as we all know, you should buy insurance when you can, not when you have to. So this is the perfect time to do it. If I were going to put something new on today, you could sell, this isn't a recommendation. It's just an idea to give you an idea on how it might work. September options have 71 days to expiration. You could sell a 5,800 call for about 40 points, and you could buy a 5,400 put for about the same, roughly 40, 45 points. So it's an even money swap. Your portfolio can pick up another 150, 200 points without you really giving anything up. And you have free insurance below 5,400. It's really hard to beat a deal like that.
Yeah, those are similar levels to what we were looking at in September as well. And you're right. I'm hard pressed to think of another time in recent history where you've been able to get that tight of protection without having to give up pretty much all of your upside. It's a very rare thing, listeners. So if you are intrigued by such things, maybe you're out there and you're listening to shows like this too, and you're thinking, I'm a little bit nervous about these markets. Well, then it's not the most expensive time to go out and buy some puts. Let's see what folks are up to out there in small caps today, listeners, because this is a nigh on historic day. I know in IWM we were threatening historic volume levels just an hour ago on the last show we were doing. Let's see if we're seeing similar paper out here in the RUT options. And the answer is yes. 68,000 contracts on the tape. That may not sound like a lot when you're looking at things like, the E-mini or, a 3-month SOFR. But small caps used to be doing 5 to 10,000 contracts on a busy week. So 50,000 is a lot. 68, almost 70,000. That is, I think the technical term is crazy town out here in small caps. Let's see what folks are up to out here this week, listeners. Again, another thing I like about small caps, they play by a little bit different rules. It's not all 0 day all the time. Like right now, 21%, so the highest percentage of these contracts is going up. And the September contract has about 71 days to go. When's the last time you saw that in an equity, listener? So we're going to hang out there. Let's see, the vol out there, almost an 1798, up $1.08 today. So a little bit of a pop out there, vol-wise. They're up 1.08 points there on the week. In terms of skew, we were just talking about how comparatively cheap these puts are. And you know what? That is the case right now in September small caps as well. The puts were 4.6% bid last week. The puts, again, are always going to be bid, barring some very strange circumstance. This week, they're a little bit juicier, 5.5% rich, but still, all things considered, that is not the heftiest bid we've seen for even puts in the small caps. The calls last week, 1.8% cheap. This week, even cheaper, 3.9% cheap. So again, that means you can get fairly tight protection out there, listeners, and sell a pretty far out of the money call against it to offset it. So as Carley was just saying, so very interesting stuff out here in small caps. And we're talking about 2142. That's where we're hanging out right now in the small caps. What was the big dog this week? If you said September 2200 calls, listeners, then you have been paying attention to this show, because that's the big dog this week. They went up 3,211 times, 2,100 on Monday, and then 865 today. So kind of quiet in the middle there. The OI, about 2,800. So today's paper could be closing, but it's probably not given the action we're seeing out there. So opening paper, also worth noting, about 2,000 of the 23 half calls went up on Monday as well. So the opening on both. So it looks like we have a 2,200 23 half vertical going up on Monday here. That's accounting for about 4,000 of the roughly 68,000 contracts we have going up this week. Again, opening on both, so it's not a roll. It looks like they're just putting on a little bit of upside action here. You like that, listeners, with the futures 2142, 70 days to go, 2,200, 23 half vertical. If today is carries out a few more times, we could be at that level pretty soon. So yeah, interesting stuff. Also interesting, the 2200s went up by themselves today. There wasn't another vertical strike with it. So it looks like it was pretty much just the 2200s by themselves today, which is also interesting. Once we get beyond the longer term 2200s, there is, of course, some near data paper going up as well. In particular, with 1 day to go, we're at 2142. The 2100s were lighting it up out there about 1,500 times this week, listeners. Probably, as you expect, we're blowing around this strike, so we're going to have opening and closing. The big day was Tuesday, 600 mostly opening. 600 again today against an OI of about 600. So I'm guessing some folks came and got the heck out of Dodge with their remaining contracts today now that we're 42 handles past the 2100 strike with a day to go. If you don't take your stuff off and we retreat again tomorrow, that's on you, listeners. You didn't take your profits. Also, the 2080 puts also expiring tomorrow, going up 1,280 times this week. All of that today, 1,274 going up today against an OI of 4. So size opening paper on the 2080 puts. Again, 60 handles out of the money with a day to go. I mean, we're having a big move out there this week and a big move today. 2080 by tomorrow. It's intriguing, to say the least, out there. That's why we crunch the numbers out here. I know, Carley, you and I have talked before about the 0 day phenomenon. These are clearly 1 day to go. So very near dated contracts. Are some of your clients over there at DeCarley, are they starting to get lured to the dark side of 0 DTE contracts? Or are they all still longer term?
Most of our clients are kind of set it and forget, not set it and forget it, but set it and wait. So most of our clients aren't doing that sort of thing, but they do use the shorter dated, not necessarily 0 day to expiration, but 2 to 4 days to expiration. They're using as hedging products, which I think is a great idea. But, just going full board speculation on the short-term stuff, not really our style.
No, it is your style, though. A little bit of ags. What do you think, Carley? Should we head there?
Absolutely.
All right, listeners, to the world of ags, a very tumultuous world, we go.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners, as the man said, time to get our hands dirty talking some ags. They're pretty easy to find in that drop down. Let's go there to the asset class. Right at the top of the list is ags. And then we're going to kick things off in grains and oilseeds under product family. In product, we're just talking about the beans complex kind of dominating our dark side this week. We had soybean oil number 4 off 5.36%, soybean meal number 3 off 5.41%, and the beans themselves at number 2 off 5.78%. So clearly something is amiss out there in the beans complex this week. So we're going to head out there. Obviously, we're going to kick things off. In the beans themselves, they do the most volume. And, the beans looking a little bit like corn this week from a volume perspective. Usually we expect corn to be around 450,000 contracts. Soybeans coming in this week, 423,000 contracts on the tape. So they are not messing around in soybeans this week. If you're wondering where are soybeans trading, that front future at 11.18 right now, off 48.25 handles or 4.1%. Just since Monday. Obviously, if you go back to the end of our hypothetical show that we didn't have last Thursday, then they'd be off nearly 6%. So a rough week for soybeans. Carley, let's start there. Let's start off explaining for our listeners who don't follow the ags, what the heck is going on in the beans, and then what are your thoughts about it?
Well, it's hard to find any fundamental reason for beans to have sold off as sharply as they did this week. The simple explanation is rain makes grain, and there's been plenty of rain, and sometimes it's really that simple. But another explanation is speculators have been rewarded by selling rallies in the grains, and they've been rewarded for the last couple of years. We've had some tremendous rallies, but as is the case always in commodities, they're boom and bust cycles. The high prices bring supply, and then prices dwindle lower. Commodities actually spend more time going down than they go up. So with that in mind, it makes a little more sense that we're seeing some of the selling we've got in the grains. One more thing to mention, $10 beans seems cheap because we were at $17, $18 a few years ago, but the reality is $9 to $10 is probably a more normal, natural range for beans. So it's hard to look at the big picture sometimes, but I think that's what we're getting is just the big picture repricing. And we may get some bounces. We're oversold, but the reality is we're probably making our way to $10, maybe even into the high nines.
Yeah, a lot of the newer entrants to these markets, a lot of the newer listeners to this show, Carley, they've had their frame of reference a little bit skewed by obviously everything what happened with Ukraine, obviously, and we saw nat gas explode. We saw a lot of the ags have big moves, so people maybe have distorted frames of reference for where these products should be trading, when in reality the normal range is obviously much different, and maybe we are retesting those lows. Anything going on at DeCarley? Any of your clients slinging any beans these days?
We don't have a lot of bean speculators at the moment. If beans get down, let's say another, if we get into towards 10, we probably start playing the upside aggressive. We've bought a few calls here and there just in case something turns around, but I'm not real confident in it. With corn, we're focused on helping our farmers hedge their price risk. I'm a little worried about corn. I think corn has a chance of seeing like 330. Low threes this year. We may get some bounces here and there, but the ultimate target's probably going to be the low threes. I hope I'm wrong because that's not good for U.S. farmers, but that seems to be what's in the cards.
Is that still the lion's share of your, maybe the beans at least clients? Are they mostly the ag producers?
Beans were actually more speculators than producers. Corn is most of our corn traders are producers. I'm not sure why. I mean, people, a lot of farmers switch back and forth and adjust according to markets. So every year can be a little bit different. But yeah, I mean, I think the name of the game for anyone that has producer exposure in ags is to hedge very aggressively on any rally. I think that's the only way to survive.
Interesting. So the beans get the speculators, but not the corn. I thought it'd be the other way
Right.
around. But yeah, interesting.
Well, I think it's because beans move a little quicker. If you're right, you're going to get more bang for your buck in beans usually, but who knows what goes through their heads? I don't know.
Words of wisdom. More bang for your buck in the beans, listeners. Not enough alliteration in that sentence. Let's keep rolling out here, listeners. See what we did see. Again, a lot of paper, 423,000 contracts on the tape in the beans this week. Of that, the largest chunk coming actually in... Yeah, it looks like we're going all the way out to November here. Nearly 40%, 39.3% November contract that has about 106 days to go. So refreshingly long term, especially when we're talking about equities where everything's got to be in the last few minutes of the day these days. So kind of nice. Of that, listeners, let's see, where are the November beans? I said we're at 11.18 in that front future. November beans, 10.68 and a quarter. So obviously much lower out there. They're off 61 handles this week, or about almost 5.5%. So they are coming for the longer term beans as well. What is the vol out there? 16 3/4, off about half a point right now. In terms of skew, last week, interesting. No one really wanted the puts. They were only they're actually 4.5% discount to the at the money. That seemed like that was the wrong way to go in hindsight. The calls were 4.3% bid. This week, the puts are less discounted, but not quite bid, which is also interesting. 2.1% cheap this week. The call is 2.5% bid. So kind of interesting as we're blowing through strikes to the downside. We're not seeing any bid really materialize in those puts. In terms of action, though, it was the par puts going up nearly 17,000 times this week here in November that were taking the pole position. Again, the 1,000 puts going up nearly 17,000. The big day is today, actually. 6,600 today against an OI of 27,000. So size paper out there on that strike. Again, makes sense. It is the psychologically important key level everyone's kind of watching out here. Then we have Wednesday, 4,500 going up, opening there. 3,400 on Monday, slightly closing, and 2,100 on Tuesday, slightly opening. So again, Carley, probably not surprising that it's the 1,000 level puts that are leading the dance. Maybe surprising that they're as far out as they are out in November, but does that come as a surprise to you?
It doesn't. It does come as a concern to me as well, though, because sometimes when you get a lot of action in a particular option direction or strike price, and the market starts dribbling down towards that, it almost acts like a vacuum or a magnet and sucks prices there. So again, be very cautious if you're long soybeans, because there's a really good chance that this is one of those years where we just experience a massive repricing, and that would most likely be to the downside.
Well, speaking of downside, if 1,000 is a little bit too far for you listeners, maybe you want a slightly in the money put. So how about the 1080 puts in November coming in at number 2? Nearly 15,000 of those. You'd be forgiven for expecting some rolling action. And it seems like we did get that on Wednesday. We had about 5,500 of the 1080 puts going up, closing against about 4,500 of the par puts. So there could have been a roll down there. But the rest of the week, it doesn't really line up. It seems like the 1080 puts were just trading on their own on an island. 4,400 on Tuesday, opening there. About 3,000 today against an OI of 15,400. So it could have been closing today, but again, it doesn't line up to today's paper on the par puts as well. It's roughly half of what we're seeing on the par puts. And then, of course, if it's a house money roll, they could be playing with house money, in which case they could be buying more of the par puts as they blow through your strike. But intriguing stuff, and about 1,800 of the 1080 puts going up on Monday, mostly opening there. So intriguing action, a lot of downside in November here for the beans. And if that's maybe too in the money for you, allow me to present a close to at the money put, slightly out of the money put now. The 1060s coming in at number 3, about 14,000 of those. The big day for those, kind of a tie between Tuesday and today, 4,200 each day. We have an OI of 11,400, obviously, against today's volume. 3,000 on Monday opening there, and 2,800 on Wednesday, slightly opening there as well. So a put palooza here in November. Maybe that's not surprising given the fact that we're selling off, but some of the strikes here are certainly interesting. And that's not enough. How about the 1040 puts for number 4? 14,100 of those as well. The big day for those, Wednesday, about 5,700. Looks like mostly closing there. 4,800 on Tuesday opening. 2,500 on Monday opening as well. And only 1,100 going up today against an OI of about 18,000. So an interesting put action out here in the beans. Let's go around a little bit, see if we see any other interesting and or aberrant paper. Let's see if there's any call action. Unless you're really excited by the September 10.5 puts, they went up about almost 13,000 times, about 12,700 times this week. So those are also sliding in there, probably coming in at number 5. If you want to find some call action, well, the 1,200 calls in November did actually go up nearly 12,000 times this week. Yeah, 11,800. Pretty steadily all week long as well. 3,700 on Wednesday, mostly closing there. So folks bailing on those as we're falling out of bed makes some sense. 3,100 on Tuesday, also closing there. 3,200 on Monday, though, slightly opening. And then 1,800 today against an OI of 14,000. So an intriguing paper across the board. It seems like 1,200 is the call strike du jour as well, because we're also seeing in the SEP contract about 3,500 of the 1,200s going up there as well. So if you want a call strike, looks like 1,200 is your huckleberry this week in the beans. Well, interesting stuff. We could talk the rest of the beans complex, or maybe is there something else in the ags that is drawing your eye? You want to get into the madness that is lean hogs? What else is catching your eye in the ags this week, Carley?
Lean hogs. I'm game for lean hogs. Let's do it.
Lean hogs it is, listeners. Go into that drop down. You're going to keep it in ags, obviously, but we're going to pop out of grains and oilseeds in the product family. We're going to go down 4 more slots to livestock. And then from there, we're going to go into 2 down in the product category to lean hogs. I joked in the past that this product was kind of an also-ran on the options front. Didn't really do much paper. Those days are behind us, listeners. 121,000 contracts on the tape in lean hogs. I haven't pulled it up. I'm going to guess that's more than, let's say, silver and a lot of the other products we might talk about here on the show. So lean hogs, bring in the heat this week. 88.5 is where they're hanging out right now, off about 1 1/3 points in that front future, about 1.5%. Obviously, we have it here off percentage-wise, about 21, almost 22% since last week. Carley, what's catching your eye out there? And looks like a pretty aggressive sell-off in the hogs.
And it's been kind of wild, too. To be honest, in the overall scheme of things, I think we're probably in the bottoming process. This is looks a lot like what we saw when the market was topping in March and April. It was really volatile, wiping everyone out on both sides, and then it rolled over and went down. And I think that's what we're doing here. And then we probably go back up from here. Yesterday was interesting on that. We gapped lower yesterday, and we traded at the end of the day. The last 20 to 30 minutes were limit down. And so it caused a lot of emotion that I could see in the tape. The option market started going berserk a little bit. But we seem to have worked that out on the open today. And I think we probably stabilize and go back up. But the interesting thing about hog options is they're normally pretty reasonably priced. Even with all of this chaos that we've seen the last couple of weeks, small speculators can get in there and not spend a whole lot of money and have a low risk and get involved in the game. And I think that's why we're starting to see the volumes go up.
Yes, the limit up, limit down. That's always fun. Something a lot of our equity-oriented listeners not exactly used to. Obviously, you can have an underlying get halted in the single names, and we could trigger circuit breakers in the major indices, but that's fairly rare. On the futures and futures options front, though, it kind of happens all the time, and I think for a lot of newcomers, it can be kind of terrifying, especially when the underlying's frozen and the options are still trading. Blows their mind a little bit. So
it does. And keep in mind, there's no limit on the options, so they can get really, really wild. And sometimes they'll price in another day or two of limit moves relative to where the futures are stuck today. So it gets pretty crazy sometimes.
Yeah, that's crazy when they're rolling the day ahead 2 or 3. You're trying to trade like that has any sort of real theoretical value out there, but that's what they do. Yeah, it's crazy town out there, listeners. I encourage you, if you haven't experienced it, go watch one of those someday. Don't trade them for your first time because it's terrifying, but go watch how that paper unfolds. It's a fascinating process at the very least. It's also fascinating to see so much paper going up in the hogs. I don't know, Carley, I was joking earlier when we first started this show many years ago. Lean hogs, not really an options player at all, maybe a few thousand contracts a week. A very different beast out here. Does it kind of surprise you just how much paper we're seeing out here these days?
It does a little bit, but on the same token, I see it on our books. Like people are really getting interested in, because the margins in some of the other products like the S&Ps, crude oil, those types of margins have gone up, which means the option prices tend to be higher. Or if you're doing option spreads and selling, the margins are higher. But the hog margin is still pretty affordable, and the options are pretty cheap. I mean, I was earlier in the show, I was mentioning we were long and wrong hogs. What we did is we put on a risk reversal too early, and we got stuck in a short put that wasn't doing so well. But even 3 or 4 points in the money, the option was only worth 5 points. So hogs is a lot more forgiving than some of the other markets, especially in regards to margin.
Interesting. So speculators, they're coming to play now, not in the corn, but in beans and in lean hogs over there at DeCarley. That's where the speculators are coming. I just want to make sure I have it straight.
You got it right.
All right. Interesting stuff. I love. That's why we crunch the numbers here, listeners. Speaking of the numbers, let's get into it now, because it is a hot week out here in the hogs, listeners. Man, they're just coming for it. In terms of action, like we said, almost 121,000 contracts, 35% of that coming in the August contract that has about 34 days to go. So we're going to hang out there. You might be forgiven for thinking this vol is exploding out here, given limit ups and everything we're seeing. It's actually coming off in that AUG contract. It's at 20 3/4 right now, off 3 points. Again, we have a contract going away in 4 days. That's trading at an 8.5 vol. We go out 33 days. That's at a 20 3/4 vol. We go out 94 days. That's at a 28 vol. So we are literally all over the place on the vol map here, listeners. I guess that's what makes hogs so fun. 20 3/4 in the August contract. That's where we're hanging out today. Skew-wise, the skew, not as crazy as you would think, given all this action we're just talking about here. The puts last week, 6.9% bid. This week, still bid, but 6.3%. So not really coming in at all. The calls last week, 2.9% cheap. This week, getting cheaper. 5.3% cheap. You'd be forgiven, especially when they got locked limit, expecting these skews to go a little bit haywire, but not really seeing that. In terms of action right now, listeners, the big dog out here in the hogs, I said we're at an 86.8 out here in the August contract, has about 34 days to go. It was the August 80 puts leading the dance with about 7,300 contracts this week. Mostly yesterday and today, 3,200 today, 3,000 yesterday. It looks like mostly closing against an OI of 11,000 contracts. About 600 on Monday, only 300 trading on Tuesday. So it wasn't that hot earlier in the week, even though it looks like folks were closing pretty much all week long. So maybe as we retreated down towards that 80 handle, then now whipsawing all over and through it again, folks are taking their 80 puts off. Either way, a lot of closing paper on the 80 put strike this week. Then behind that, for number 2, we actually have to jump out all the way to December, 154 days, listeners, to the 84 calls. By the way, that D's futures at a 62.5. So that 84 strike is pretty far out of the money. Going up 5,100 times this week. The big day was Tuesday, nearly 3,000 on Tuesday. It's like folks mostly bailing there. 1,100 on Wednesday and about 1,000 on Monday. It's like bailing all week long, which again, 84 strike. Your futures at a 62.5. I guess you got to get the heck out of Dodge when you can. There's still 4,800 contracts open on this strike, so there's still more to go if folks want to bail. I'm not sure how much value is left on these right now, but an intriguing strike to say the least out here. I was not expecting the 84 calls. How about 70 calls in November, listeners, coming in here, in October, coming in here as well, doing 4,200 contracts out here this week, listeners. 4,200 contracts. Looks like all of that again yesterday and today. 2,100 yesterday, about 2,100 again today, against an OI of about 1,900. So clearly opening again today as well. And they were opening yesterday. So folks opening on the 70s. That October future is at a 69.4. So 70 calls at the money strike now. I think they were in the money when they started opening these, though. So yeah, kind of crazy strikes all over the place, which again kind of reflects what you were talking about, Carley, the fact that we've been whipsawing and locked limit the last few sessions. I guess some of these strikes back that up, Carley. They're all over the place.
They are all over the place. I think it's probably too late to buy puts. I mean, we started this move at 106, 107 in the front month, and now we got down into the low 80s. Anything could happen, but it would be unlikely for hogs to get much cheaper than this.
I think we got time to squeeze in one more complex. You talking about corn? We can hang out there, or maybe there's some other complex. I don't think you and I have ever done a show where we haven't talked about nat gas, but it is not on our movers and shakers this week. But we could certainly go there if it intrigues you. You make the call, Carley. Where should we go next?
Let's go to nat gas. Let's do it.
All right. I invoked it, so I guess now we have to talk about it. To the world of energy we go, listeners.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, you know what to do. Go into that drop down, pop out of ags, go down 2 more slots to energy, then in product family, go down 3 slots to nat gas, and that will get you to where we're hanging out right now in the old natural gas. And an intriguing time, again, not on our movers and shakers, a rare week when nat gas is not lighting up the tape. In fact, I'm trying to scroll here just to see if I see it anywhere even close to our top 10 for the week. It'd be at number 8 to the dark side this week. If we expanded our bottom 5 to be a bottom 8, it would be there. It's at a 227 in that front future, off about a nickel this week, or a little over 2% out there. So intriguing stuff. Carley, you're always talking about a lot of upside in nat gas, hanging out close to 2.25. What's catching your eye out there in nat gas this week?
Well, we have been playing the downside over the last month or so, but we actually have flipped, and I think it's probably a better buy than a sell here. So we've got an option spread going where we're short October nat gas 210 puts, and then we use the proceeds to buy 275 $3 call spread. So it's not an aggressive call spread, and we actually got a credit to do it. As long as nat gas stays above 210 in October, we're in pretty good shape. To be honest, I do think there's probably another 10 cents, maybe even 15 on the downside from where we are now. No guarantees. I mean, we'll just have to, you know how that goes. It's weather related, but seasonality is pretty strong this time of year. And the market's kind of already priced in all the drama at the ports with exporting, and I think we wiped out all the overzealous buyers that got in a few months ago. So again, better buy than a sell, but you want to be careful because there is a little bit of downside risk from here.
I like that, a bullish risk reversal, and you get a credit to do it. So not the worst thing out there, Carley. Let's see if the volume backs that up out here. Is it a hot week out here, pun intended, in nat gas? It's decent. If you go back to the old frame of reference where it used to do 450,000 contracts, then 643 seems like a lot. Of course, in recent memory, nat gas has been putting up well over 1 million many weeks, up to like 1.1, 1.2. So from that perspective, it's actually a little bit light on the volume front. And leading the dance with 36.4%, we have the August contract going out in about 15 days, taking the top spot. What is the volume? You might be wondering. In August, nat gas 53.25, off about 1.5 points. So nat gas, usually one of the more volatile products we're talking about here on the show every week. Still pretty frothy, even if at 53, it's roughly half of what we've seen it get up to and beyond. It's been in triple digits very easily, and certainly in the 60s and 70s very easily as well. So 53, starting to get maybe a little bit on the low side from a vol perspective out here in nat. Again, it is summertime, so you look at what we're just talking about from a CVOL perspective. Vol's coming in across the board, unless you're talking small caps. So probably forgiven for seeing some of those lower levels, but intriguing level nonetheless. In terms of skew, this is probably the flattest I've seen nat gas skew in a while. Let's see, the puts last week were 1% cheap. This week, 1.3% cheap. So no real bias in any direction there. The calls, 1.6% bid last week, 1.9% bid this week. So Carley, at least in the near term, the nat gas skew is telling us to expect a whole heck of a lot of nothing. What are your thoughts on that skew? And also that vol level I was talking about, 53. Where does that slot in for you in terms of nat gas vol? Is that starting to get a little cheap to you too?
It's starting to get a little cheap. I prefer to see it get a little cheaper just because of this position we currently have on. But to be honest, I think as time goes on over the next couple of years, nat gas vol is probably going to continue to decline. We had fireworks for a couple of years. Now we're due for probably several years of a whole bunch of nothing. So it's going to start getting quiet, I think.
Yeah, again, that whole Ukraine really just messing with everyone's frame of reference. They're expecting, $9 and $10 calls to be lighting it up the tape again. I don't know if we're seeing those days anytime soon. Again, probably a good thing for society if we're not as well. But
correct.
That's a conversation for another day. Let's see what's lighting it up out here today, listeners, in this week. It was, again, out there in the August contract, it was the 2 1/4 puts. I said we're hanging out right around 227. This is pretty much the at the money put right now, listeners, going up 30,000 times. The big day was Wednesday, 11,600, slightly closing there, 6,200 today against an OI of 27,000. So size OI still on the strike. 5,300 on Tuesday opening and 7,000 on Monday, mostly closing. So as you would probably expect, a lot of back and forth on the at the money put strike. Makes a certain amount of sense. And then behind it, looks like we have a tie, or pretty close to it, for number 2. Actually, I take that back. We do have a close tie, but we actually have for number 3. Let's go out now, though, to the October contract here. The 3/2 calls are actually coming in at number 2. These were going up 26, almost 27,000 times this week. So getting a little bit of call action. Let's see what folks were up to out here. Oh, folks were bailing on those this week as well. I was about to say, is somebody opening for size on the 3/2 strike in October? And the answer is no. They are closing for size, listeners, which again makes a little bit more sense. The big day is actually today, 12,200 going up today against an OI of 28,000. So there is still some size OI left on this strike as well. 7,600 on Wednesday, 3,500 each Monday and Tuesday, closing pretty much all week. So folks, getting the heck out of Dodge on the 3/2 calls makes a certain amount of sense. 3/2 is a bit in the rearview mirror, I think, at least for right now. That October future is trading at a 239, listeners. So well over a point below that strike. If they were rolling, looks like they could have been rolling on Wednesday. We have about 7,600 each going up, the 3/2s and the 3s. So they were rolling to the 3 strike. So opening on the 3s, closing on the 3/2s, even 3. I don't know if 3's going to do it for you as well. Of course, if Carley's risk reversal comes to pass, and maybe that 3 strike by October could be looking a little bit better. 2,800 of these 3s going up on today against an OI of 34,000. So there's still size open on the 3s as well. So it looks like folks were rolling a bit from the 3/2s down to the 3s. I don't know, 3 strike by October. I forgot. What were the months for your risk reversal again, Carley?
We're using October.
Oh, there you go. So you're a fan of these. You want these 3s to light it up.
Yeah. Well, we're short the 3s, but we're long the 275. So I'm fine if the 3s light it up.
If the 3s light it up, you're looking pretty good. Yeah, you're not looking bad.
We're fine
At all. 3, I think, could be a bit of a bridge too far, but I guess we'll find out. That's why you're short the 3s probably out there.
Probably.
So this 14,000, that's you, Carley. That's what's going on out here in the 3 calls in NatGas. Let's see if we see any other weird and or interesting prints out here. I said we had kind of a tie for number 3, listeners, and that was pretty much back in the August contract. We have 19,000 and change of the 2/2 calls and the 2 puts going up this week. We'll go to the 2 puts first because they're slightly more. 19,900 of those going up this week. The big day for those, Wednesday. Looks like folks bailing on the 2 puts on Wednesday. I don't see any rolling paper again. Looks like it's just folks getting the heck out of Dodge. 6,900 today against an OI of 41,000. So still size OI on that strike as well. 2,900 on Tuesday opening, 2,200 on Monday, mostly opening. And then we have the 2/2 calls going up this week, 19,200 times. Pretty even all week long, 5,500 or so almost every day. Opening all week long, with the exception of Tuesday, 3,200 going up on Tuesday, slightly closing there. The OI at the end of the week, about 15,000 exactly on this strike. So kind of the paper we expect. Let's look if you see any other weird prints here, Carley. How about the 6 calls? The 6 calls out here in November, they went up 7,300 times this week. That's interesting. I have to hope there's some sort of funky spread against that, but let's go find out, shall we, listeners? They traded 7,330 times this week, 5,000 exactly on Monday. Looks like paper closing there. And then 2,300 times on Tuesday opening, and then a whopping 30 on Wednesday and a goose egg today. That's an OI total of 11,000 now on this strike. If they were closing on the Monday 6 calls, there was opening of 3,000, I should say, of the 3/2. So would they roll from the 6s to the 3/2? I don't know. That's How much juice you got left in those 6 calls, Carly? Are they even worth rolling at this point?
Yeah, a whole lot of nothing. I mean, I think they look like they're only worth a penny. So you might as well just, I don't know, lottery tickets maybe, but I don't know why else you'd want those.
Yeah, roll them at this point for a penny. You might as well just let the dice fly at that point, right? And see.
Can't get worse. It can only get better.
Exactly. And unfortunately, that music means this show can't get any better or worse because we're running out of time here, Carly. But before we go, if there's any other complexes you wanted to try to squeeze in, you want to make some comments on them, that's just burning up your tape and we didn't get a chance to talk about them, have at it. I'll give you a few minutes here at the end of the show. And then B, if people are intrigued, they want to reach out to you to talk beans or nat gas or equities or anything else, where should they go? What should they do?
Website is DeCarleyTrading.com, DeCarley trading.com. You can also find me at Twitter. The handle is @CarleyGarner.
And any other complexes or trades you've noticed out there you want to mention for the folks before we roll out of here? Now is the time.
You know what? I don't have another complex. We already talked about soybeans, but I will mention you talked about the $12 call being very, very popular. If you draw a trend line on the daily chart of the September contract, $12 is where the trend line comes in. So I can see why people would want to own those. If something changes weather-wise, that's where we could go. I'm not saying we will, but it's worth having some exposure there if you're a gambler.
Interesting. 12 calls, listeners, for the gamblers. In the meantime, if you don't want to gamble, you want to trade with high probability, perhaps, some commodity options, then hit up Carly over there at DeCarley Trading. Give her a follow on Twitter as well, at Carley Garner, Carley Garner, Garner. All one word out there, listeners. And you know where to go. If you want to check out all these reports for yourselves, CMEGroup.com/TWIFO. The place to go to kick the tires and light the fires. That's going to do it for us on the network today. Back again tomorrow, noon Central, 1 p.m. Eastern, to talk a little bit of vol. Who's going to join us in the show? Well, you got to tune in to find out. And then after that, we come back one final time for the week, exclusively for our pro friends over there at theoptionsinsider.com/pro. The place to go for a little bit of options oddities. Then we're off for the weekend. Back again next week, kicking it off with the option block on Monday all the way through to next Thursday. Another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.